Hello and welcome to today's Stock Watch. So two companies that I'd like to speak about today are from the American banking sector, which are JP Morgan Chase and Goldman Sachs. So as the earnings season takes full stride, JP Morgan Chase yesterday posted an earnings that beat analyst estimates. The bank posted third quarter profits of $9.44 billion or $2.92 per share, exceeding the $2.23 per share that was expected. It generated a revenue of almost $30 billion, about $1.5 billion more than what was expected, fueled in part by better than expected trading results. Rather than building reserves from loan losses, as it has done aggressively in the first half of the year, it actually reduced them by $569 million. However, the lender's shares dipped slightly after rising 1.5% in pre-market trading on the back of sentiment shifting over the bank's failure to set aside more provisions for counteracting the coronavirus. JP Morgan shares have dropped 27% this year, but after a somewhat positive sentiment, it could be in for a rebound. On to Goldman Sachs now. What can we expect from their earnings report later today? Well, the company is expected to earn $5.61 per share. Meanwhile, the so-called whisper numbers coming in at a higher rate of 5.81. So basically the whisper number is just Wall Street's unofficial view on the earnings. In addition, data platform Snowflake has recently signed a multi-million-dollar deal with Goldman Sachs. The cloud management company continues to make headlines after its record-setting IPO. Now, the key question for the quarter is whether American banks can show that they're largely done setting aside money for loan defaults tied to the pandemic. The fate of the banking industry is closely tied to the pandemic because of the obvious reasons that unemployment and business disruptions caused by the virus impacts the abilities of customers and companies to repay their debts. So I'll take a look at JP Morgan Chase first of all. So like a lot of other companies, we've seen a bit of a fall in the pandemic downturn. Then we've seen the recovery, and now we're going through a slight descending channel with a bit of hope on the horizon recently in the last couple of weeks. So what I want to do is really look into this, and as I can see at the moment, it's looking like we're having a bit of a resistance top as we go into the middle of November. So I want to accentuate that on the 4-hour chart. So as I come to the 4-hour chart now, I want to see what Fibonacci levels we have from the lower to the high. So what I'm seeing at the moment is we're getting a little bit of resistance on the trend line given. If it cannot pierce this resistance, then I'm looking like it's going to start dropping roughly down past the $100 and then moving down to the lower $98 region. The market closed very indecisively in the last candlestick on the 4-hour chart, so this indicates that we could see a bit of a downturn when the markets open later today. So like I said, I'll be looking to see if it can fall below the $100 area, going down to 99, and then possibly down to the 97, which we saw previous lows a few days ago. A quick look on Goldman Sachs now, and as we can see, the recovery after the pandemic has been a bit more prominent than JP Morgan Chase. We've actually had a few high attempts here with a couple of bottoms, but as we can see, we're pushing up further for a bit more of an upside trend. So I'm just going to take a Fibo from the daily chart and just zoom in on these areas here. So on the 4-hour chart, we're just seeing this kind of sideways zigzag motion, which has seen us go into a little bit of a descending channel, but I'm not really too concerned about that because the bias at the moment seems to be going towards the upside. So if we can basically break this top that we've seen in the middle of July, this is the area that I'll be looking at next. So I'm just going to zoom in a little bit more for a better perspective. So I'm going to take just a Fibonacci from the recent lows to the highs, and what I'm looking at now is roughly about the $210 mark. If we can avoid breaking down past this area here to the $205, which is the 50%, then I fully expect it to test this trend line and then push up to the previous highs, possibly by the end of the week. So depending on the earnings report, depending on the data coming out for the company, I'll be looking at that very closely, and this will give me a good indication on when the market's going to move next. So as I said, I'll just be looking at this top here at roughly about $213, and then a move up to $223 in the next week or so, which will be roughly about a $10 move. So that's all from me today. Thank you very much for joining me. If you have any comments, please feel free to leave them on the post, and I'll get back to you as soon as possible. Have a great trading day ahead. Bye for now.